Hello to you all, welcome to the presentation of my latest product. In this case, I took our most stable and the best product that I would say overall, Calculus, and in this case I'm trying to adapt it to the multiple time frame approach and take the calculation and adapt it to different types of time frames. In this case, the main calculation, the one coming from one tool to rule them all, which in the settings it can be found within the Dominus logic. With all of this in mind, I decided in the end to release it as a standalone version because I don't want it to be confused with the correlation and with the normal calculus version. The reason behind it is that I want to maintain the initial logic intact on the calculus, while if I'm going to make different type of updates, I want them to be related with risk management or some sort of additional layers, in the calculation, while at the same time still maintaining the original one. While in this case is coming with the MTF version is coming, with the full upgrade of the logic, so it's going to be a new one, and that's why I want to release it as a standalone and check initially, how it's going to perform. Test it, for some months, and after that, slowly incorporate it within the calculus itself. With all of this in mind, let's get on with it. So the interface is going to be pretty similar with what we have with the other products. The main difference is going to come here. Like, as I said, if you are going to just use the calculus logic, you are going to have the same calculations like with the normal versions of calculus. However, if you go with either Dominus or the multiple logic combined, in this case, the rating that I have, it has been changed and updated. While in this case, for example, you can select if you want the rating to be on both moving averages and the oscillator or on into all of them. I have found, in general, the best results to be used with all of them. At the same time, the percentages are similar with the other one, in this case representing 55% of all our indicators from here, both moving averages and oscillators, are telling us to go long, and 60% are telling us to go short. Excluding these, kinda everything else is the same. Now let's take a look into it and see the differences of the performance. So here, for example, we can see the new version of Calculus, and in this case it's on the Coinbase. The max drawdown has been changed, the way of calculation, because in this case, in the past, the max drawdown took into account the closed trades, while now it's also taking into account the movement of a trade. And this value for here is not real, because if we go, for example, in 2017, like here, you can see that in this case we had this trade that literally the market went against us 98%, but we actually only end up losing 17 because we exit at the end of the candle. So because of this, the true correct average, I would say if you want to take it the correct version, you should go, for example, from 2018, and in this case you are going to have around 42%, which is more than reasonable. However, at the same time, if you want to take another way, to calculate it, in this case you can take this value from here, so you can take the total net profit. So for example, so you can take 85847. This one you are going to divide it by the max drawdown quantity, in this case 1394. So this, for example, is going to be, let me calculate it for a moment. So 85 divided by 14 is going to be 6.07. So this is equal 6.07, and now we take 1 and we divide 100, better said, at 6.07. And in this case, it's going to be 100 divided by 6.07. The true ratio is going to be 16.5, the true DD ratio. So this is the correct way, that you can use it, but yeah, you can use both of them. But if you want to use this one, I would say the best that you can do is you have to take all the trades, and in this case, with all the trades, you calculate all the losses that you have in a row before you are going to have a profitable trade. And with that one, you can have the true drawdown ratio, from the strategy. As I said, This new drawdown that appears here is because it's taking into account the drawdown of a position itself and not when the position has been closed. Anyway, with this in mind, as we can see, the difference, like for example, if I'm going to take with the normal calculus, so let's take for example the 6th version, we can see in this case that the 6th version had 28,000 total profit and 6.3 thousand drawdown, while for example this one, it would have almost 4 times more than that. The biggest amount of wins, for example, is going to come this year. You can see the difference, it's almost double. And at the same time, for example, 2019 and 2020. But yeah, you know, it's going to perform much better in certain situations. At the same time, if I calculate, for example, with the correlation version of the BTC, we can see that we are beating it as well. So in this case, we are going to have 150, for example, this year. But yeah, overall, the biggest difference is going to be here. You can see that the profit factor now is 3.5 compared to 2, or the one from the calculus itself, which is 1.8. So we are going to have less trades, but they are going to be with much more quality. In this case, this type of settings, they are coming with the correlation from the BTC. At the same time, let's take a look, for example, into the BTC itself. There is not so big difference, honestly, in the total amount of data compared to the other versions. Like for example, we can see here we would have 19,000 and a 40% drawdown, compared, for example, with 15,000 and 2.3 thousand percent, but a 40% I mean, as well, and the correlation version as well. So mostly we can see that it's also superior. We have a 3.8, the profit factor, which is the biggest lead. Now, many of you have asked me, you know, one of the best pairs that I would say for correlation. Well, one of these best pairs that I would suggest, for example, is going to be Bitcoin Cash. It's very, very, very highly correlated, you know, with BTC, and in general, for example, you can see that with this new version you can achieve even twice more benefit overall than with the other one. The other one, for example, that you can use, it can be LTC USDT. In this case, as well, we have, for example, an improvement in the data. Of course, ATH USDT, it's a big one. BNB USDT as well. It's a very, very good correlated pair as well. What else? XLM Stellar USDT as well. I would say it works pretty good for the correlation. XRP as well, but XRP is work better with the other version than with this one. But yeah, you can achieve good results with this one as well. Zeta Cash, of course, Zeta Cash as well. It's a very good it's a good correlation. Let me take a look more. Neo, it's a good correlation as well, and we can see that overall is working very, very good. Matic it's been lately more. Yeah, Solana, I have focused Solana. I forget about Solana as well, especially with the new version. Link USDT, if I'm not mistaken, I believe this one kind of works as well. Uniswap USDT, looks like this one it had a big loss, so actually not. LRC as well maybe. But yeah, in general, you should focus on Feel, of course. Yeah, Feel, of course, very, very good one. ATC as well, very good one. EOS as well, very good one. DOT, good one. Of course, ADA, you know, without a doubt. ADA as well, it's a good one. Yeah, in general, you should look into the most powerful coins, that been around since forever, and they are still around, they are still receiving updates, and yeah, they have a huge correlation with BTC. They are in the top 25 or top 50, I would say as well. You should look into this, and they are not so easily manipulated, like for example with the low market cap coins, like for example top 200 or top 100 as well. So yeah, I would say some of those, are one of the best course pairs which can be used. PTG as well, but this one I believe it's with the other version works better. Yeah. Anyway, with this in mind, I would like to ask you this time, you know, like in order to avoid, you know, all the differences between all the strategies that you already have within your invite list, I will ask you now, if you want to have access to this version and you're a client, just let me know in private your trading view ID, and I will gladly give you access to it. At the same time, I would like to say that this version, this calculus version, can also be used with stocks. So let's say, for example, we can go with 30 minutes. In this case, I don't want to use correlation anymore. I'm just going to use Domino's version. So we are going to go, for example, with QQQ, which many of you know. Like, let's increase a little bit the capital. So we can see, for example, like I had a sort of settings here, if I'm not mistaken, but we can go with multiple logic as well, yeah. And we can go with 3, 1, 0.4, I believe it was 0.5. I believe it was something like this, and 2 on the standard deviation. So it was this one. Well, let me check. But we want only Domino's. Okay, we want only Domino's. Right. There we go. So chart 0405. So here as well 0405. Well, this version, if I'm just going to plug it right now, it's going to enter much better. But yeah, here are the settings. So let's take a look at the settings. So we have volatility 3, we have Domino's logic only, we use the chart, we use the all, 0.4, 0.5, standard deviation of 2 instead of 4, like we have on the calculus and ATH, and everything else is the same. And we can see very good performance on QQQ, for example. In this case, we beat it by 2 times in the last 7 years, you know, which I believe it's a very good. It's a very good result. At the same time, it has a very good drawdown. You know, if you take a look into it. Then, for example, as well, like if we go with SPI, we can see that without many changes, I believe we're going to beat it as well. Yeah, not by a great margin, but we still beat it. Yeah, and if I believe there are some optimizations to be done, you know, into it, it can be improved for sure. For example, I believe it was 0.35. Yeah, for example, like this, you can see right now we just beat it by 98 with 130. So yeah, it's a 30% increase, especially, you know, for this period which you have right now. So yeah, we are going to strongly benefit, of course, when it's going to be the short market, the short market, because on the long, you know, of course, the buy and hold itself might outperform us. But we are going to greatly benefit, you know, from the short movement. But yeah, I would say, like I said, it's a very good possibility as well. Let's take a look, for example, into Apple. Like if I will use the Domino's logic, but this way I believe it was better with multiple logic. So in this case, for example, we can see that with multiple logic it worked even better. So 880%, and the buy and hold, we will beat it by 2 times. Of course, in this case, the most is coming from the long and then from the short. So yeah, as I said, you know, it's a very good opportunity to look into the stocks as well. But yeah, mainly we have it for the BTC. Regarding the alerts, yeah, I forgot to speak about the alerts. So the alerts are going to be the same like with the normal version of Calculus, the dynamic version. So let's go with the 4 hours. Let's remove this for a moment. So we go with this one and this one, and let's make the default. So in this case, yeah, I have it here. I want one. So in this case, for the alert, like usual, we have the long entry and the short entry. We can see that in this case, for the strategy, in the risk management, we are using the short dynamic exit based on the lowest low and highest high point. So because we are using that, our alerts are going to be, I'm going to write it here. So we have okay, no, this one. So we have long entry, long exit, short entry, short exit, and short exit LH. So in this case, this is how it should be configured. In this case, we will have 5 alerts. The reason is that, as I said, we have the lowest low and highest high. So long entry, long exit is normal, short exit, short entry is normal. But yeah, we also have to put, for example, if you are using the market close order from the 3 commas, we are going to have to put it 2 times, one on the short exit and the other one as well in the short exit, lowest low and highest high. Because it depends on which one we are going to get it first. So yeah, this is the other version as well, and I believe with this I can explain it all. So yeah, thank you for watching, and if you have any question, please let me know. Thank you, bye bye.